to tell us about what the mood is like amongst emerging markets and markets like India. Adrian Lim, Investment Manager, Asian Equities at Aberdeen Asset Management, joins us now to talk about that. Adrian, good morning. Always a pleasure speaking with you. The view that we get from a lot of emerging market experts is that India continues to be relatively the cleanest shirt in an otherwise dirty laundry basket. Is that your sense as well? And have you in the recent past increased your allocation to India?
Well, I think the emerging markets, as you say, is a dirty laundry basket, but that's perhaps slightly unfair. I think not just in India, but in every emerging market, there are always companies that are interesting to us. From a top-down perspective, you are right. India is relatively clean. Valuations are not cheap, not bargain basement, but the fiscal position is clean, the macro position is improving, and the issues and some of the steps and blocks are there for an extended recovery that people with a medium-term view can take advantage of. So yes, that's not always a very attractive way of putting it, but India is relatively attractive in the emerging market space.
Okay, morning, Adrian. I'm glad you said top-down is not what you want to look at. You will always find bottom-up stories. So I straight away want to get into that. The big bottom-up story which you have always betted on are IT stocks in India. And the Cognizant numbers should warm your heart, I think. What have you made of those numbers? And therefore, what will be your approach to the IT holdings you already have and intend to have?
Well, we don't hold Cognizant. Cognizant is a strong company as well. We hold Tata Consultancy and we hold Infosys, and but those three, many people consider those three to be leaders in terms of scale and reach and technical ability and marketing and track record as well, especially over the last 5 years or so. I think what is interesting is that those three have got a challenge over the medium term. You're talking about scale, they have effectively scaled up very well, but you're talking about an environment where IT service growth levels aren't what they used to be in the past. Many of these companies need to look at new value-added propositions. It's not just a matter of getting a software engineer's hours in the developed world replaced by a software engineer's hours in the developing world. They do need to add value, they do need to consult, and they do need to move on from the value chain. We think those three are excellent examples of companies that are well-resourced and well aware of the challenges that they face. In the medium term, some of these quarters, this quarter looks okay, but we expect medium-term, short-term volatility, but we think medium-term, the prospects in the IT space for some of the Indian companies continue to be attractive. We're not looking at adding new names to the IT space currently, but the balance sheets as well as the valuations of these major companies continue to be relatively attractive in the Indian universe.
Okay, now, what I wanted to ask was, looking at the results of Cognizant, are you impressed enough to increase your existing holdings in the TCSs and the Infosyses?
I think we have quite a lot at this junction. If you look at our main Indian fund, our main Indian single country fund, you would see that both TCS and Infosys are large positions. They're top 5 positions within our funds. So we have quite enough of those stocks at this current time. I don't think we don't usually look at another stock and say, well, if that stock is doing well, something in the same peer group should be doing well too. I think that's an assumption too far, or projection too far. We focus specifically on what that particular stock has delivered in terms of results, and then we make our decisions from there.
Okay.
Okay. Financials has the highest percentage allocation in your sectoral holdings, more than 21%. And within that, you have for very long been positive on private sector banks. But this year was interesting because a stock like ICICI Bank has actually lost 12% of its value in 2015 so far, and it forms a part of your top holding. What do you do at a time like this? Do you think the pace of growth for private sector banks will moderate, or do you still expect private banks to outperform the market?
I think it depends on your time. Been slightly troubled given the asset quality that it's been delivering over the last couple of quarters or so. And what we see is that at a time like this, we would evaluate beyond just the asset quality of its balance sheet. We look at the brand position, we look at its reach, we look at its scale, we look at the capital structure. And there, ICICI Bank actually has got quite strong levels of capital if you measure by CAR ratio, for example. And at times like this, when we think that perhaps it's underperformed, we will consider topping up or buying more of that stock. We don't take a short-term view, so if we just see short-term fluctuations in share price, is actually a buying or selling opportunity of an incremental amount, we won't substantially change our position within the stock itself.
Okay. Well, the more important sector I wanted to discuss with you, Adrian, is your views on the consumer staples sector. You have quite a few holdings in that space as well. You have Godrej Consumer for sure, and some others as well. What was the key takeaway you got from the various consumer staples stocks, both that you own and that you don't own? Is there an improvement in demand? Would you add to that, Kitty?
You're right. We do have quite a lot in consumer staples, and what we do see is that you basically see you can't say that it's an easy operating environment. And even when you look at categories, it can be quite mixed. You see resilience in certain products, and you see softness in certain products. And what we try and do is identify the companies that have a decent chance of outperforming their peer group. Now, if a category is hit, and the category is important to that consumer company, it is difficult for it to be totally insensitive to what happens within the category itself. But a good company will be able to mitigate some of these risks. And so we do see a continued mixed environment. It's got to do with the relatively muted level of GDP growth compared to what India has been delivering over the last 5-8 years. It's got to do with the monsoons as well. It's got to do with the rural economy as well as the urban economy, and how much of the money or cash earned in the urban economy moves down to the rural family members. And so it's still an environment that's challenging. So what we do is really important for us to pick the stocks that we think will punch above its weight. So we have quite a bit in ITC, we have quite a bit in Levers, we have a bit in Godrej, as you say, as well. And we do think these companies will do well in the long term, regardless of these short-term challenges.
Okay. One stock that has punched way above its weight for you guys has been Bosch. I mean, in the last 2 years, that stock has gone from, 8,000 and now it's almost at 25,000. What do you do with some of these high-value stocks that have become, expensive for regular retail investors to buy, and a lot of the audience right now is retail in nature? Do you continue to stay invested in these companies despite higher valuations?
Yeah, actually in India, the Indian market is not a cheap market. If you look across the Asia-Pacific region, if you look across the emerging market space, India have very rarely been trading at a discount to average. It's usually trading at a premium to average as a basket of stocks. So I think it's really important that although we are mindful of valuations, the really important thing for us is the quality of the operations and the quality of the companies and the businesses that they run. So a stock like Bosch, which has technology, which has a brand, which has very focused promoters, is valuable to us. Now, at some point in time, there is a price that you would take some money off the table. But I don't see, given the stage of development in India's auto space, as well as the technology requirements that are coming through and the environmental requirements that are coming through, I can't see us exiting Bosch completely.
Okay. Well, I have a more macro question for you, Adrian. Do you think flows will start picking up or increase in India, increase to India from foreign investors? Crude is a natural advantage if it stays the way it is. As well, lower gold means more Indians save less in gold and more in financial instruments. Are the macros giving you a sense at all that flows will increase to India?
That's my soft underbelly. I do a very poor job about predicting flows, and the reason it's difficult the reason it's very difficult to predict flows is it's not related only to the attraction of India. It's also related to how unattractive equity markets outside India are. It's related to how attractive the fixed income space is compared to the equity space, as well as the direct investment,
all right, Adrian,
or the cash space as well.
Let me just rephrase the question in that case. As a fund manager yourself, don't think about your Aberdeen India fund, but if you were managing emerging market funds or global funds, at this juncture, would you increase the allocation to India?
I don't do fixed income, I don't do macro, so that's a question that I'll be ill-equipped to answer anyway.
That's fine. We touched your soft underbelly, as you pointed out. But let me get back to what you do best, which is picking stocks. One stock that you've had for a very long time in your portfolio and has given you big returns is Lupin. But some of these names have sort of had a bit of a stop and start this year. So it's been sort of a consolidation phase, in the last 3 to 6 months. What do you do in the pharmaceutical space now? And on Lupin particularly, are you still hopeful that this could be the outperformer in the years to come?
Yeah, I think Lupin's well positioned. We have, just to share with you the pharmaceutical stocks that we hold Sun Pharma, we hold Lupin, but we also hold things like Glaxo and Sanofi. We hold Piramal, but Piramal's now more financial sector stock than a pharmaceutical stock. So we have a basket approach within the pharmaceutical space, and to fill that basket, we find companies that have a good technological pipeline, a good track record, good science, and yet with a feel for the regulatory environment, with a feel for working effectively with regulators, not just in India but in the markets that they export to. So yes, I think to answer your question, Lupin and Sun remain to us attractive candidates for outperformance over the long term.
Okay. Adrian, one last question. If you were to increase the list of stocks in which you are invested, which look potentially good candidates for you, stocks or sectors?
A sector. Actually, we do like what we currently have. Okay. You see, the situation is if India were cheap, then you would, or parts of India were cheap, then you go on price. You get more. You might be distracted, but India is not. India is not particularly cheap, so you go on the most attractive quality of business, quality of companies. So we currently like what we have. So, and as you say, we have quite a bit in financial companies, quite a bit in IT companies, and consumer staples. Those would be the three legs on which our fund would stand on.
All right, we'll have to leave it at that. Adrian, it's always a pleasure speaking with you. Thank you so much for dropping by.